Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, December 17th. It's straight up 7 o'clock as I'm starting the video. And as always, please run it, your player at 1.25 to 1.5x. Okay, wrapping up a really busy and crazy week. Looking at futures. I've got large caps and small caps pretty much flat, but the NASDAQ still under pressure, down about 0.75% as I'm starting the video. We'll see how that goes into the cash open. Gold on a stealth move back up through 1810. That has been a real frustrating widowmaker type trade here the last, going back 6 months to a year. We've tried gold a couple times, keep getting stopped out. I think it'll eventually go, but for right now, I've kind of put it in the too hard pile. And, I'm not saying I'm right or wrong, but if you keep, everybody's got one or two of those in on their list. Whether it's gold or a specific stock, that it just seems like every single time you do it, it ends up wrong. And so there's no shame in just saying it's in the too hard pile. There's, 1,000 other stocks or tickers that you can trade. Pick one that you seem to get in sync with. And I just haven't been in sync with gold for whatever reason. So it's in the too hard pile. If you've been nailing it, then nail it again. But for right now, I'm just going to let that go. But it is starting to work its way up towards a breakout level. And I think that's what I'm going to do. And there's no guarantee that this time would work either. But I'm going to wait till it really proves itself and gets above some of this congestion that it's been in for 6 months or even a year of going up, and the fake breakout and the comeback and lose $50 in a day. And I just got tired of it. There's more than one place to make money. Bitcoin I saw was down 1.75%. That's been volatile here lately as well. Don't forget today on the macro front, we've got the quad witching, all of the December futures and equities and all that stuff is rolling off today. And the last few times have not proven to be ultra dynamic, on the day of expiration. But always keep that in your mind that it could be. And from all I've been reading, and it's like most quad expirations, there's a lot of delta rolling off. And we talk about the put walls and the call walls, where all these traders have built up sizable positions at certain locations on a given name, like an Apple, the bigger names, or certainly on the indexes. And then a lot of that rolls off. And then what happens is in the following week, the market is much more able to kind of freely find its new area of value, if you will, and those call and put wall locations will move and then be reestablished over the following month. So let's just say there was a put wall at SPY 450. I don't know where it is exactly, but at SPY 450, there's going to be a lot of incentive today to make sure those people don't win, right? The object of the market is to make the most people lose as possible. So if there's a big put wall at 450, and then price starts going down towards that level, all the forces that be don't want those people to get paid. So they keep it at 453. Those all those put options at 450 expire worthless. And then next week, that wall is not there, so then price can go down and then find a new level of support where more, puts would be bought and that wall be built again. And the same thing happens on the upside. So as price moves into those ranges at expiration, there are forces that be that make them not want to win. And then, of course, if it were to break below 450 today, that's when all hell breaks loose, because then you got market makers having to scramble, and you've got all these people that have those options, of course, that would go into the money. So that's when things can get crazy. So over on the earnings front, we got Darden Restaurants here this morning. That might be an interesting read on the restaurant sector. We had Adobe yesterday. Did not help tech at all. I think it was down about $40 yesterday. You need to move that into your bracket trade list, because there's a big overhead gap now on Adobe. And also we had FedEx last night. I didn't look at the numbers particularly closely. I just saw that they had gapped up about, $10 or $15. So you can add that to your gap list as well. And then you can also look at Lowe's that may be following, or not Lowe's, I'm sorry, UPS, sister company in the same group as FedEx. See how UPS might handle that FedEx news. So let's get into the charts. Lots to go over. VIX. Of course, we had the big move yesterday. The initial move was down. Remember, our first half of a candle went higher, and then they reversed it and did a lot of selling the rest of the day, and then we got a bump up on the VIX. And just remember, we've got this open gap up there that's kind of in the back of my mind that they're going to want to fill that. And I'm not saying it's today. I'm just saying it's going to get filled, and I want to be ready for that. Looking over at our oscillators, we had been reached down here the other day prior to the Fed announcement. It was down at minus 50. Then we got a sharp move higher on the Powell reaction. And then yesterday, even though there was a lot of selling, the oscillator really didn't come down. It's only at minus 35. So I think from an oscillator standpoint, much more room to the downside. Now, just as I'm thinking about it here, I didn't plan to show this, but I think I'm gonna. That percent over 50, we got the big move up, and then right back down to 20. So from a percent above the 50, you can see on the chart that it doesn't get much lower. So from that standpoint, it looks like a place where price could reverse. But I will say one thing. Remember that the generals are the last to go. So think about it. Under the surface, right? Under the surface of the market, there's been a massive amount of damage on the average NASDAQ stock. That's what this is reflecting. And on this chart, Apple is the same as, Adobe. Microsoft is the same as some semiconductor stock. So the generals are still relatively near their highs, whereas the average stock has been decimated. So this is true in and of itself, but remember, if they start going after the generals, this isn't going to move a whole lot. I mean, it may come down a little bit more, but there could be a lot more movement on the top line of the indexes compared to, these oscillator and these kind of statistical charts. So let's get into SPY. Here was the J. Powell day. Here was that first bar, came up, double top. I mentioned it in the trading room yesterday that it was a double top setup with bearish divergence. That doesn't, when I say setup, that's what I truly mean. It doesn't mean that it has to play out. It just means that there's a setup. So we had a high, but we were back here at this high at a higher momentum than a higher high in price and a lower high in momentum. That's the opposite of a double bottom setup or a divergent low setup where you got a lower low in price but a higher low in momentum, if I've made myself clear. So here you can see that when price was at the high, momentum wasn't there. And then, so looking at your trading opportunities there, I can see how somebody would not take that trade just because of the previous bar. The gigantic bar from the day before certainly influences you. But when price lost the prior day's closing high and lost this high that was at the same place, that was your first short entry. And then, just right on down the line, just like we always say, losing levels from above is bearish. So you had, there was an entry, there was an entry, there was an entry, right on down the list. So for this morning, I've got a pivot on SPY at 466. I think if you break below that again, we had a look below that they bought back up into the close. So you break back below 466 again, my first target would be 464 essentially. Let's look at it on the 5-minute chart. And here you see the same type levels all the way down. And we've got this line of support right here at 466.25. However, you've got that marked on your chart. Then we've got the top of this box as next support, 464. And then, of course, if you break that, then that old thing we keep saying, the target is the bottom of the box, goes back into this range. Then you're back to the top of the gap. And then you've got the gap. And then you've got these lower levels where the prior lows were, right? So I think at this point, I just want to say, I think the last couple of days have been really, really important, especially for new chartists, aspiring traders, really for anybody. Number one, and you always even doubt yourself, even as many times as you may have seen it, that tendency for the first move out of the FOMC to be fake. As dramatic as it was, as big a bar as that was, it was fake, right? They faded it the next day. Now we're looking at SPY. They took half back. I mean, you see that all the time. But when you look at these charts that I'm going to show you in a minute on the Qs, I mean, they faded it all, right? First move was truly fake. And then, but if you somehow got it in your mind that because of this bar, we were going on to new highs, that runs counter to that mindset that I want you to adopt, which is leaf on a stream, right? So the leaf on the stream has no biases, doesn't care, just flows with the currents, happy either way. And so up we go, fake bar, couldn't take out resistance here, reversed, and then back down. And in the room yesterday, as the morning was starting to unfold, I saw a couple traders post, it doesn't even matter what the tickers were, got stopped out of my calls. Okay, that happens. You think price is going up and you get and it goes down, you're stopped out. So, and then, a half hour later, got stopped out on my calls, right? So that's the second time it's happened. When you see things start to roll over, don't be the guy that is always trying to step in to this kind of move and thinking you're going to find a bounce point, because that leads to a very frustrating day where price comes into this level, you think it's going to bounce, so you buy calls, and then it stops you out. You come down to the next level of support, you buy calls, and you get stopped out. And then, so all day, while price keeps making lower and lower prices, you keep buying calls and you keep getting stopped out. At a certain point, you've got to recognize that price is going down and wait for a sign of a bounce. Wait for the signal of a reversal. Because if you've got, all of FATMAAN rolling over, all semis rolling over, are you going to be the guy that picks the one ticker that reverses? That all happens in an instant while you're trading. What side of the market do I want to be on? Which way is the leaf flowing? Where is the path of least resistance? Do I have any evidence that price is going to stop going down? Is it starting to build a base? Am I at a super key support area? Those are the kind of questions you want to ask yourself when you get in, one of these sell-offs, just like the day before. Would you want to be a guy to be saying, "Oh, let's short it here. That's a spot. Let's short it. I got stopped out. Let's short it here. Got stopped out. Let's short it here. It can't go up any higher," and you get stopped out again. So I think there has to be a point of recognition in there where you've got to have some evidence of something changing before you try to shoot against what is happening. So I hope you navigated that, and I hope just that commentary right there helped you a little bit in your future trades. But what I would do is I would take a printout like this and I would mark it up, J. Powell, and then the next day, what can happen on a post-Fed type deal. This was all positioning, caught off sides, and then they decided that they really did want to sell it again. So you can print that out, put that on your corkboard, make some notes, because history tends to repeat itself. And that's where that thing, the first move is usually fake, comes from. It happens again and again and again. And this time was just a little bit more dramatic. So, okay, QQQ. I'm going to go back to the daily chart just to show you. You know how I like trading ranges. Price can do anything it wants in here. It's sitting on the 50. It's got to hold this lower edge of the box. The last time it went down there at this 380 level right here, that has to hold. And if it doesn't, comes down here and breaks through it, then you're looking at like a move down about $10 down towards 371. So, and that would be your first lower low, right? Because here's one low, and if this box breaks, then you got a lower low. So you've got a high, a lower high, a low, and a lower low. So that would start the transition from a consolidation top to a downtrend. Series of lower highs and lower lows is your downtrend. So on the 30-minute chart, we just get a blow up, but you can see here was the low of the other day. That's certainly going to be a toggle point. I don't know why I don't have that down there, but here's your prior low down at 380. So that would definitely be an area that you want to have a big highlight on your chart. IWM, year-long, big consolidation range. We broke down. We said it's going to the bottom of the box. That was the default target. Got to hold 210. I mean, if it doesn't hold 210, then your $20, $23 measured move puts it all the way down at 190. And then that would look like a massive year-long consolidation top. So I think it would be really technically important to hold 210 on any kind of a down move. And here you can see it on the 2 hour. We had the move up, the double bottom, the rejection here at 220, and then right back down to 213. And so we've got a support level here at 210 that you really want to hold. And I think that would be a place. I would be surprised if it just sliced through that. Anything's possible. But there's a ton of support. Just go back to the daily chart. You'll see all the touches down at 210. So that's going to be a really important level. And here you just see it on the 30-minute chart. That's not really adding a lot of detail. You've got these prior lows here where price is sitting, and then you had this little baby undercut that they bought up the other day after Powell. So really back here at 212.50, you don't want to see price go below that. If it does, probably going down to 210 to test the bottom part of the box. Now on the FATMAAN names, I want to zoom out just to see where we're at on the daily, and then we'll just go down to the 60-minute charts here. Facebook, daily chart, divergent low, right? Here's a low, here's a low, lower low, higher low in PPO, higher low in RSI. That's bullish. We have price above all the moving averages. That's bullish, and sitting on top of the 50. That's a perfect little place on the chart to make a perfect little reference point. If you're above all the moving averages and you're above the 50 and all those moving averages are above the 200, then you're not in panic mode. I think you've got a pivot point here around 3. Well, we'll see it on the 2-hour chart. But what I want to say here is this. You need to be aware that all these moving averages are scrunched together, and that can be a powerful setup either to the upside or the downside. Because look, if it goes from closes below 325, then you're below all of them. You're below the 8, 20, 50, and you can see the 200 coming in right here at 325. So that can, then that turns this relatively benign setup into a bearish setup, because you would have lost this big volume over price bar at 325. You would lose this big pivot point at the 200, and then you're on the wrong side of everything. And then if it price rolled down and made a lower low, then this thing would be really, really vulnerable to a sizable pullback, because one, support is falling away, but also, I mean, once you're below all the moving averages and they all turn down, those are going to be resistance on the way back up. Sorry, I went the wrong way. Yeah, here's just some granularity on that. This 334 is your pivot this morning, and you can see the lines of overhead resistance and the lines of support. And you can see this really important level right here at 327. That would be something that I would make a big note on in your chart. Why? Because look at all the reactions along this line. Shows you how important that 327 is. And if it were to break below, I think that's a place where I would want to be short and see if I can get a move down to not only fill this gap, but back test this prior low down here at 300. And that would prove to be a really nice trade. And the thing is, you would have a very, very objective entry after you lost all this support. And then I think you would be, that would be a very objective place. And I think that would turn out to be a good trade if they start going after the generals in a big way. Here's Apple. Probably one of the most not only important, but strongest charts in the deck. And we're just right here dropping below the 8 EMA. I've got a level of importance here at 170. If you lose 170, then you got the 20, right down below it at 166. And then you got the 50 all the way down here at 150. So I would be getting cautious on a move below 170. And I would be, if price moves below the 8 and the 20, then we already know we need to be tactically defensive, because the distance between the moving averages is getting farther and farther apart. So a move below 166 probably going to come down here to the 50, $6 or $7 lower. And then if it decides that it's going to go back to trend or test the 200, that's all the way back at 145. Notice also, we've already got a break in RSI, a break of trend. That's bearish. And we've got a high-level PPO that's starting to roll over. And so if price went down and you got a bear PPO cross, high level, and you get an RSI move below 50, then the chances of this rolling down like it did over here are greatly elevated, and you certainly don't want to be sitting on the long side when all that is going on. Tesla spent most of the afternoon sitting on this gap between 9:30 and 9:10. Remember, we had done a lot of measured move analysis that you start losing this level, projects it down into the high 800s, like 880, 870. So I think it's going to be important for price to, kind of hold in here. If there's a lot of selling in tech today to wrap up the week, I think at a minimum you're going to get this gap to fill, and then you've got some support at 900. But then below that, you're into the high 800 area. I've been absolutely astounded at how much daily travel that one of the biggest cap names out there, in Microsoft, moving $10 a day in either direction. It's been, I hate to say gravy train because that makes it seem easy, but I've done really well on Microsoft just because I was focused on it and I had the levels down, and then I got lucky. So it usually takes all three to get that. But anyways, the levels couldn't be more clear. We're here on the daily chart. We've got a prior low right here at 322.50. We're back at the 50. We tagged 322.50 yesterday before things stabilized. I'll just say it like this. You get a break below 322.50, you want to be short. Why? You got a massive void. You've got a gap below. You'd be below the 50, and the 200 is way down here, like $40 lower. So, and then you've got the prior breakout here at 305. I think you lose 322.50. I think you're going to find 305. That would tell me they're going after the generals. This thing isn't over yet. Blah, 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 blah. I think this gap would fill, and then you got your 305, and then that is your big level that you want to really focus on, because below that, then you got real trouble. Anyways, here's been the action on the 60-minute chart. We talked yesterday about recapturing levels from below. Buy point, buy point, buy point. Got to the bottom of the gap and stopped on a dime. Came up to this level 336, which we had on the chart. Got rejected. And then when it started coming back down, you had a series of sell points. You had the loss of the prior day's high. That's a sell signal. You had the loss of 334, which was a level you had on the charts. They were close together, but whether you took it here or here, both would have been valid. Not much of a difference monetarily. But then as price started rolling down, you lost 332, then you lost 329, then you lost 327. And the thing about this, it was very orderly. There was time. There weren't any jack moves to scare you out. It was just all you had to do is sit there and wait and possibly roll down if you were worried about it. As price rolled down, you could move your strikes or your stops down, or add to positions on each break, or just sit there with your initial position at 334. So that's been a real good trade. Here on Amazon, I just wanted to give you the big picture that we had way back when we had a fake breakout. We came back in and we found some support down here. in the 31.50 area. We rallied back up, put in that double top, and now we're back in the box and just above the 200 moving average. I think on the daily chart, that's a great toggle point, 33.50. Once you get below the 200, then you got to be looking to the downside for follow-up moves. Here today, I've got a pivot point at 33.80 with resistance 34.40, 34.60. But then you've got this prior low here is just below at 33.40. Then you've got a level at 3,300. And then if you lose 3,300, I think you start rolling downhill pretty quickly. Google, still a strong chart. Sitting here on the 50, got a little symmetrical triangle. You get a break below the 50. I think you're going to come down to 2,800, and then that becomes a really important level. Notice that at 2,800, you've got the largest volume over price bar. Most recently, you had 4 days in a row where price reached down to 2,800, where there were responsive buyers. And so if you lost that level, then I think you're coming down to 2,700 pretty quick. You've got another large volume over price bar there. And then if you lose 2,700, you come down to the 200, $100 lower. So I think on Google, it breaks down in $100 increments. And here you can see they sold it off, but they didn't fade 100%. So that's positive in that respect. I think on the downside today, if there's more selling, you want to key off this 28.40 first, and then you want to key off 28.10 second, and then we've got the bigger level at 2,800, 27.90 in there, and then you see where the gap is. Netflix never really got a giant bounce off of Powell, and now it's below 600. I think, and below all the moving averages, I think this is going to roll down at a minimum to test the 200 here at 577.50. 576 is the 200. But then you got this big $90 trading range. And if price were to move into here, lose 560, then I think you got to be short, because then then your target is $90 lower, and I think you want to be involved at that point because there's probably a whole lot of selling going on. SMH, they really went after Adobe and Skyworks and Ambarella and AMD yesterday. Really faded the whole move. You can see on the daily chart here where the 50 comes in is right at the bottom of the box, and that level is 292.50. You want to make a mark or a note of that if you're involved in semiconductors. So this has been just a lot of vicious volatility between these two levels, with this big red bar yesterday where they faded the whole amount. If you haven't been trading it, or you just want to trade the daily time frame, I would key off of 292.50. If you're long above that, that's fine. But if you lose the 50, you got a massive void over here where I think you want to be short, because the next level of support is all the way down at 275, and that's 1750 lower. I think you want to be in that trade. If you're more of an active trader, you've got some very clean levels to shoot against. Here's that prior low, if it comes down here and holds, that's fine. Give you a little base to get long, that's fine. But if it slices through and starts rolling down, you can be short against this 293, or you can use that 290, 250 that we just talked about. Quickly, I'm back in ARK short. I mean, I felt I had to cover on the Powell moonshot, but as soon as things started rolling over yesterday, I went back to those positions. So it was more of a wash than, getting too cute. And it turned out I could have been fine just staying short. But with that big bar on J. Powell, I kind of got scared and said, hey, they're going to take it up. So I got out, but then I re-entered again. So here we got ARK weekly, still below the level 42. I think you can stay short against that. ARKG, I've been short, so I'm still short. Looking for 45 on a measured move basis. Here's the ARKK weekly. Still looks bearish to me. Below key support, building out a flat flag. I think it's going to come down to 75. That's your next big level of support. And then here's the ARKW. Looks just as bearish as the other ones. Why? Because you lost the prior low. You lost all the moving averages. You lost this support. And you're into thin air below. So I'm not going to try to go after a lot of individual short names. I'm going to stick to ARK and stay short across that space. If I find one or two here or there, if there's more selling to be had, I may take those. But these are kind of my core shorts because they kind of encapsulate the things that are doing horribly. Those high valuation, no earnings type names. And I think those are the ones that are going to have the toughest environment going forward. So long video. I hope it gives you a good wrap up to the week and some good thought ideas for your active trading on your psychology as you face some of these high volatile days. And I'll make one last reminder before signing off. Volatility can scare or panic a lot of traders. And if that's you, I would do one thing for sure. If you always say, this is too much for me, I don't feel comfortable, and you don't work through it, you're never going to get comfortable. The only thing that's going to make you get comfortable is working through it. But reduce your trading size to one contract and just get used to that feeling of it moving a lot, and set your stops and honor your stops. Because when you have that extra volatility, and if you're a guy that looks at your P&L every 5 seconds, that's usually what makes people nervous, watching the money go up and down, every tick. So if you focus on the levels and you take your position down to like 1, you're going to build up some comfort in those high volatility environments. And I think then after you go through that, through a period of time, then you're going to be a lot more comfortable in your trading, and then you'll be able to more easily, build up your trade size. So let's leave it there. This has been Chris Buss with Trader's Profit Compass. Hope you enjoyed the video. Hope it helps. Have a good day of trading.